All right, current junk removal and prospective junk removal business owners. This is another episode of Junk Removal Made Simple by the Junk Removal Authority. Today, voice cracking there, I'm 13. Today we're talking about insurance. Look at a lot of questions about insurance. What kind of protection do I need? How much protection do I need? What I want to remind everybody is the point of insurance is to keep a bad event, a negative event, be it an injury, an automobile accident, damaging property, to keep that occurrence from financially ruining you. So, if you have the income coming in and you're doing enough volume of business, it's going to be tough to achieve this in junk removal, but there's certain circumstances you don't necessarily need insurance. Like, for example, life insurance. If you have $50 million in the bank, if you're worth several hundred million, you have $50 million in the bank, or you have a lot of income producing property or other investments, you probably don't need a life insurance policy. You probably don't. You probably have enough investments to protect your loved ones that when you pass, they're protected. So, and then you got like really, really large corporations that bring in so much money they're self-insured, because it would cost them so much in insurance, and they bring in enough money that if somebody gets, there's companies that have self-insured healthcare policies like SAS locally here. They have so much money and they have so many team members, it's cheaper for them to be self-insured, where they actually pay they pay all medical bills out of their own company policy. Now, again, you're not going to achieve that in a junk removal business. There's no way. There's just not enough demand, enough volume to be able to ever get to that size. I mean, 1-800-GOT-JUNK isn't even close to being able to do that. So that won't happen in your case. But remember, the point of insurance is to prevent you from being financially ruined. So you can be over-insured, meaning you can have too much insurance coverage that it's just technically not possible to, it's just no way you're going to have that much damage that's going to occur. So you don't want to be over-insured. But the worst thing, perhaps one of the worst things, is being under-insured. So like, for example, in North Carolina, the minimum automobile policy that's required is $300,000 liability. And I think it's $50,000, it's either 50 or 100, but I think it's $50,000 in collision. Well, think about how many, let's say if you run into a family, there's a $100,000 Mercedes with four people, with a family of four in it. You run into them, and all of them have medical bills. You're going to exceed $300,000, and legally, you're supposed to make up that difference. So what you need at minimum, in case of automobile, we'll cover this in a bit, but at minimum $1 million liability. And I can't remember what we have on collision, but I mean, I'd have more than 100,000. I'd have over 100,000. I'd probably have 300,000 or something like that. We might not be quite 300,000, but at least the minimum. What'll kill you is the liability. You need $1 million liability policy, because that should just about cover you. It is possible to do more than that, and at that point, you're just going to have to, you have to figure it out. But it's very, very highly unlikely. So, first type of protection we'll talk about is your general business liability. Liability. Okay, so your general business liability is just going to basically cover damage to property when you're not moving an item or doing anything where you're loading a vehicle. And that's inside the house, inside an office building, back shed. It's kind of weird, but actually, if you damage property when you're bringing an item, no matter where it is, and the final destination is to go into your truck to be transported to landfill or sold or donated or recycled, then that actually falls under your automobile insurance policy. So damage to property while not loading vehicle. So that means if you're providing general labor for the customer, we get people that call us, hey, we just want to move some stuff around the house. If you damage something in that person's house and the stuff is not going to be loaded in your truck at any point, then that falls under your regular liability policy. It's also if you leave a tool out or leave something in a walkway, and somebody gets hurt. So, and that somebody is a non-employee. So if an employee gets hurt because of anything related to working, it falls under your workers' compensation policy. In this case, this would be you left something out in the middle of a walkway, you left a shovel laying on the ground, somebody walks up and they step on that shovel and the bar comes up and hits them in the head and they have to go get looked at or whatever. They shouldn't, but maybe they do. That would fall under your liability policy. General liability is cheap. You should be under 1K, at least in North Carolina, and in my experience in some of the other states, that's the case. Places like California or something like that, it might be a bit different. We haven't worked. The only customers we have in California are AdWords customers. We haven't done a business package. We haven't done any consulting work in California, so simply haven't done research. Irregardless, all of this is based off my knowledge. I am not an insurance expert. I am not an insurance agent. You need to check with your local insurance agent to confirm all this information that you're getting here and to look into your particular policy. This is just my experience in the state of North Carolina, having run a junk removal business for 6 years. So I have a decent understanding of it. I'm not an expert though, so you always need to consult an expert before making any decisions on your insurance policy, on what you need, how much you need, all that kind of stuff. But this will give you enough information where you'll know enough about it, you can ask the right questions to that insurance agent. Okay, so your automobile policy. So, most of you probably know you've got liability protection. And liability is going to be, if you injure passengers or, anybody else in like in another vehicle, or how do we want to word that, or persons in other vehicle or other vehicle. And that would be pedestrians too, and then also that's other property. I said something incorrect earlier also. I was talking about an automobile and I was talking about, I might not be completely clear anyway. So this right here, this covers people's other property. Collision covers your vehicle. So you just need your collision set and at a rate enough, at a high enough rate to repair or actually replace your vehicle. So that's kind of how you're going to do your collision. All right, so your liability is most important. You need at least $1 million. That will protect you. That should protect you from hurting other people or damaging other property. Hopefully, anyway. It's kind of a gray area, or not a gray area. That still might not be quite enough in a really, really bad situation, but it should cover you 99.9% of any issues you would have. Owner's driving record. Try and keep a good driving record. I won't write that on there, but the owner's driving record is going to really affect your insurance rate. So if you have a bunch of speeding tickets, the owner of the business, if you have a bunch of speeding tickets and you have a bunch of at-fault accidents or anything like that, you expect to pay a lot higher. Even if you're not going to be driving that much, they base the rates mainly off the owner when it comes to a small business. You're going to pay a premium for inexperienced drivers. Normally something like $300-400 for the period for the year for each inexperienced driver you have, and they consider an inexperienced driver a driver with under 3 years of driving experience. They will typically, depending on your policy, if you're willing to pay that premium, they'll typically insure them. But if they get in an accident, then a lot of times they tell you that they are no longer covered under insurance. They'll pay for that one accident, but that from here on out, you don't need to have them driving. And then collision. just enough to replace vehicle. So state the value at enough to replace the vehicle. Now if you actually get in an accident and this thing's totaled, your stated value may or may not come into play. That's when you really have to do some negotiation with insurance companies. Because you could have a vehicle that's only worth $10,000, but you're not going to replace it for $10,000. You're not going to find a comparable vehicle out there that's reliable for $10,000. You're probably going to be closer to maybe 25 or 30. So state it high enough to replace it. And if it gets in an accident where it's totaled, you're just going to have to go to war with you might have to go to war with the insurance company. So that's kind of just an unfortunate thing. In aviation, I think a lot of you know that I've got an airplane. I've been a pilot a long time, and the way aviation works is whatever your stated value, then that's what they'll pay up to. So for example, the plane I have, I think I've got the stated value on it at $105,000. So they would pay, no questions asked, up to $105,000, and it's probably a $105,000 airplane, and I could replace it for $105,000. I bought it for $95,000. I could replace it for $105,000. So, but they would pay right up there, no questions asked. Automobile is not the same way. Okay, and this is kind of quirky. Until you make a claim, you'll probably never know this, but this covers damage to property when loading truck. And it does not matter where you are. It doesn't matter if you're inside the home, in the top of an office building, in a back storage shed, anywhere you are. If you are carrying an item, if you damage a hardwood floor, which is a nightmare, if you damage a hardwood floor, if you knock a hole in the wall, any type of property damage that occurs when you are taking an item from wherever it currently is, and the final destination, at least for that job, is your truck, that's going to fall under your automobile policy. So you need to make sure your guys are very careful when loading items, obviously. I mean, and you'll probably have a $500 or $1,000 deductible. So generally, you're going to cover, if it's if it's $1,000 or really $1,500 and less, and we do damage to somebody's property, we're going to go ahead and pick up the tab ourselves. And luckily, our first several years in operation, when myself or Christian was on the truck, I don't think we ever damaged anything. But as you grow and as you get more team members, they're going to make some more mistakes. So this is going to come into play a little more. But if the same person damages property like more than once or twice, the insurance company will actually tell you, hey, if this person messes up again, you need to let them go. They're not going to be covered anymore. Or it could be after the first time, hey, you need to let this person go. So you need to make it very clear to your guys that they have a lot to lose personally by making a mistake, and you can't put up with it. If somebody's damaging property a lot, they got to go. The health of your business depends on it. So people got to roll if they can't keep from messing stuff up. This right here, how much you pay is dependent on the value of your vehicles, really, and how many vehicles you have. Junk doctors, we pay about $16,000 a year in automobile insurance, and that's with, I think we have 11 vehicles on that policy. Some dump trucks, and then we have a couple not personal vehicles, like non-dump truck related stuff, all business related, all commercial related, but is on that policy. And we pay about $16,000. If you're, again, you have to check rates on this, but I mean, depending on the value of a truck, you have a $20,000 truck, and it's an NRR rated to 19.5. You're going to be on it. You're going to have an experienced driver on it. I'm going to wager you're going to be somewhere around $1,200 to $1,500 for the year. That could very well be high. That could be very high. So get it's just been so long since we just had one vehicle, so I just can't remember. It seemed like it was $1,000, $1,200, something like that. But just check with your insurance agent. They'll get you squared away there. And the final one is the Mac Daddy of them all, and that is the dreaded workers' compensation. Workers' compensation will become one of your largest expenses as you grow. We pay, here, I'm going to put this on here because it's such a large number. What is it about? I don't know the final figure, but it's roughly $45,000 a year. That we pay for junk doctors. About $45,000 a year we pay for junk doctors. Now, it's based on payroll, percentage of payroll. When you first start, 12% at start. These are rough rates. We are currently at 6%. Or I think it's 6.5%. So what that means is out of every $100 in payroll, you're going to pay $12 at the start. Out of every $100 in payroll, like we're paying about $6.50 at the start. It's based on the experience. It's the fact we have had very few workers' compensation claims. We've had a couple. We've had two expensive ones. We had one guy that didn't have the proper gloves on, grabbed a piece of tin and was going to rip the tin off the roof of a shed, and it sliced into his hand, damaged ligaments and all. I think workers' comp paid out about $16K on that. And then we had some guy, we had a bogus claim against us where some damn idiot claims he was lifting a bookshelf up into the back of the truck and it hurt his back. Oh, it hurt his back so bad. So we that guy, he got paid out for a while, and finally we wound up suing us. Of course, you know, your workers' comp company covers all legal bills, and then they defend you. So really, you generally don't have to do a whole lot. The workers' comp company will cover it. It's a bogus claim. There's a light bookshelf. The guy's just a damn wimp, and he's just trying to game the system and just collect money for doing no work. He's part of one of the big problems in America right now, trying to get something for nothing. I don't respect him whatsoever, and you know, I hopefully they'll get that completely wrapped up, because I know it's a bogus claim and it's jacking everybody's rates up. Everybody's rates up and jacks up. But I think the total they're going to pay out maybe $15,000-$20,000 on that. So the 6 years that we've been in business, that's what, $36,000 or something will have been paid out over that time period. And you know, we're paying, sitting there, you know, they're still making damn good money, because I mean, we're paying $45,000 for the year. Now we haven't been paying $45,000 all 6 years, because you know, when we first started it was a couple thousand, and then it was probably 10,000, and then it was 30,000, and now it's 45,000. So, but still, we've well overpaid that $36,000. One of the biggest savings is don't have it cover you. So myself and Christian, as officers of junk doctors, are not covered under our workers' compensation policy. Otherwise, it would jack it up. I mean, our salaries alone, it would jack it up another $14,000 a year, roughly. So you've got to make sure, you know, you need to be careful. But I would suggest don't cover you. Make sure you have good health insurance. Your health insurance will cover it if you're the owner of the business. I believe, again, I'm not 100% positive in your particular state, or even 100% positive in the state of North Carolina. My understanding of it is, though, that if you get injured on the job, your health insurance policy will cover your bills, but you're not going to be paid for your time off. So generally I say don't cover you, and verify everything that I'm saying. Verify everything I'm saying in this video. Don't just rely on me. I'm not an insurance expert, but I know enough about it to feel comfortable at least giving you the questions to ask your insurance agent. A lot of you are going to skip workers' comp. I know that. I would be very nervous. We did it for a while. State of North Carolina, I think it's 3 employees is the threshold. So when we were under 3, not counting the owners, when we were under 3, we did not have workers' comp. And I didn't really have a whole lot to lose at that time, so they couldn't have sued but for so much. I didn't have a house, I didn't have a whole lot of assets or anything like that. But you need to, if you've got any assets built up, if you've had a previous job, a corporate job, and you've got a house and you've got a family and you have a family and you've got some assets to your name, you need to get workers' comp. Don't skimp on it. It's expensive. It could place your profitability. It could put off your profitability for several months or a year or whatever, but it could financially ruin you. Again, what's the point of insurance? To keep you from being financially ruined. This could keep you from getting from this. This could make you financially ruined. It could also run you out of business. So and you can go to jail. If you're breaking the law, if you don't have workers' comp and you have over the threshold of employees, and somebody gets hurt and can't get paid, you can go to jail for this. So I mean, this is a major thing. Workers' comp is a big deal. Don't underestimate it, and get coverage as soon as humanly possible. Try to get workers' comp is there's a couple different ways going with it. A lot of times you do estimated payroll, so you actually pay monthly based on your estimated payroll. Try and get it where it's a pay as you go. I'll have to get a bigger board. So what I mean by that, you need to ask your insurance agent, instead of me just estimating my payroll, can I submit payroll reports, or can my payroll service submit payroll reports monthly, and we'll pay an invoice as we go. That prevents you from having to do an audit. Well, not necessarily having to do an audit at the end of the year. They still might audit you. But what happens is, if you're doing estimated payroll and you estimate your payroll at, say, $20,000 at the beginning of the year, and let's say you have just one hellaciously good year, you double or triple what you're expecting. So you're expecting to pay $20,000 in payroll, you wind up paying $60,000 in payroll. It's easy to forget this workers' compensation, saying, hey, I need to update this. I need to update my estimated workers' comp. And all of a sudden you get audited at the end of the year, and instead of you paid workers' comp on $20,000 worth of payroll, but you're sitting here, it's like, oh shit, I'm at $60,000 worth of payroll. And so you're gonna have to pay 3 times, or you're gonna, if you paid on that $20,000, let's keep it simple. If you paid on that $20,000, you paid $2,000 worth of payroll, and then all of a sudden you did 3 times that amount. You got to make up the $4,000, and so on $20,000 payroll, that's not a huge deal. But let's go to $100,000. Let's say you estimated $100,000 worth of payroll, and you should have been paying $10K. And then all of a sudden you got $300,000 worth of payroll, and that means you should have been paid $30K. You got a $20,000 difference to make up. We screwed up, and I'm not going to go into the story because it's a long one. It was just a big area. We screwed up, and we had a $51,000 invoice for workers' comp. It was actually, we were not audited 1 year. We had some circumstances happen where we weren't audited. We did not update our estimated payroll, so our payroll was off of numbers from 2 years prior, and we had doubled both those years. So we doubled in business that first year, we doubled in business the next year, so our payroll was just tremendously higher than what we had estimated. We owed $51,000. Keep an eye on the estimated payroll. Try and get a pay-as-you-go. We've got one now. We love it. Every single month, we just pay out how much business we had. For how much payroll we had. It's great. Employee dishonesty bond. I've run out of room on here, but employee dishonesty bond basically just covers theft. If the employee steals something like jewelry, whatever, it covers theft. It's very cheap, like $500. Employee dishonesty bond, though, you should go ahead and get it. $500 for the year. Make sure your policy, your liability, automobile, and workers' comp is fine listing additional insured, or not workers' comp, automobile and liability can list additional insured, because a lot of commercial companies you go with are going to want you to list them as an additional insured. So make sure they're willing to do that. Some policies charge. You need to see how much they charge and if you're comfortable paying that. If you ever have to deal with Compliance Depot, I'm so sorry. Oh God, Compliance Depot is taking over the apartment industry, at least in North Carolina. So Compliance Depot is actually a company, it's not even a property management company, it's a company that a management company hires to make sure that a vendor has the correct insurance and all their insurance information's on file and is current, and they make sure they've got a W-9 form and anything else that particular apartment company wants. The problem is Compliance Depot, it's on a case-by-case basis, but many vendors, many property managers have become where they want like a million different owners listed as additional insureds. It's either gets very expensive or an insurance company won't do it. Compliance Depot is a pain in the ass to deal with. I'm hoping somebody from Compliance Depot watches this. I'm hoping some apartment managers watch this. Compliance Depot does a good job for their vendors, or not for their customers, the apartment complexes, but I think it's making it very difficult for apartment complexes to find vendors for certain services. And they've had services they might have used for 10 years, and all of a sudden these guys just cannot get covered under insurance. It can take us a month to get covered under Compliance Depot. It's such a slow process. So if you have to deal with Compliance Depot, you might want to ask your insurance agent, have you dealt with Compliance Depot before? How does it work? We need a policy that's going to be, we need to work with an insurance company that's going to help us out with Compliance Depot. Also, don't ever go directly to the insurance. Go to an insurance broker. So go to an insurance broker that actually shops a multitude of different insurance companies. You'll get the best rates that way and the best coverage. There is some additional exposure you need to think about that it's tough to get insurance on. One is sensitive documents. Some of y'all might have watched a video I had earlier this week on sensitive documents where we had a run-in with that. Or actually some comic books that needed to get destroyed. But anyway, watch that video if you want to kind of hear about that. But anytime you're removing sensitive documents, you need to tell the customer these really need to be shredded. If you want us to take them to landfill, we will, but you need to sign this form waiving us of any liability. Because what happens in transportation and what happens once it gets to the landfill is beyond our control. You need to waive us of all liability before we haul these items. We recommend getting a shredding company to come shred them or shred them yourself. Family and friends hiring you to come remove items at a house of a homeowner that isn't there. So if the homeowner's out of town, not there, and a family member or a friend comes and they want you to remove items, you need to have a form, and you need to have an attorney draw up a form. If you work with JRA, we'll help you provide and get you one. But you need an attorney draw up a form that is a power of attorney. So that means and the homeowner needs to sign it, that he is granting this particular person power of attorney to decide what goes in this home. So it's a sticky situation, and you're going to get from time to time a wife or a husband calls and says, hey, my wife is out of town, my husband's out of town, I need you to come remove this stuff. So even there's a little gray area there. What if they're going through a split? What if they're getting separated? Technically, they've got, since if they're listed as a homeowner, if they're listed as the property owner, if they're actually married, then you should be okay. But at the same time, if they're going through a split, or say they got divorced, it wasn't a current wife or current husband, it was an ex-wife or ex-husband, then you got your situation going on there. So that's just always stuff you kind of have to think about. Junking valuable items. We did a job for a prosthetic leg company, and several months after we did the job, they called us and accused us of taking some stuff that wasn't supposed to have been taken, some prosthetic legs, and dumping them. And they attached a $40,000 invoice to cover the missing inventory. So, number one, there was a moving company there that could have taken the stuff as well. Nothing was on video. Number two, if we took them, we could have taken them, we might not have. They got dumped if we took them. They were in some just like cardboard box. If you got $40,000 worth of inventory, why is it in a cardboard box? It was a huge warehouse we were clearing out. We asked them to please stay with us and kind of supervise and make sure we're taking what's supposed to be taken. They did not feel like that was necessary. They said, take this. And then we asked them to go through with us, and we want to tag everything that's not going. Or tag everything that is going in that case, because there's a lot of stuff that's not going. They didn't want to do that. So what happens is I called insurance. Insurance contacted them, basically said, listen, you're negligent in this, and there's no proof that we actually took it. Another potential area of liability is if you're doing a job at a house and somebody actually is not there, so the homeowner isn't going to be present, you need to get them to sign a liability release saying you're not responsible if anything goes missing, or if you accidentally take anything that you weren't supposed to take. If they're not going to be there to supervise, then you need to get that form signed. I hope everybody enjoyed this episode of Junk Removal Made Simple. Again, through the end of this week, through the end of March, which ends this week, a 1-hour consulting call completely free, normally $150 value. and typically you have to buy at least 2 hours. So normally you're spending at least $300 on it, and that price is probably going to go up. I'd like to double that price because in that hour you're getting so much more. You're getting 10 times or 100 times more than $150 in the hour you speak with me on it, because we've done so much of junk removal. I mean, it's just an unlimited amount. If you have questions, you can speak with me on it. $150 can answer your questions, and that can be thousands and thousands and thousands of dollars of benefit to you. Also, AdWords management. Again, you can use the same AdWords policy that we've been using, that we've perfected over 6 years. We manage everybody's campaign throughout. We can go all throughout the country and take that campaign. And the thing is we're not just building the ads. We're not just putting the ads in place. We'll customize your landing pages. We'll add in maybe an online booking system if you don't have one. We'll work with you on how are you talking to customers on the phone. So it's a complete package that we offer, because we know, since we're in the junk removal business, we know that it's not the fact that an AdWords company is bringing you web traffic. Is one, it has to be the right web traffic, and two, they need to actually pick up the phone and call you. And then the third thing is you need to be able to close that sale. You need to be able to close the sale so it becomes business. It becomes business for you. This AdWords is not cheap. Not at all. Our AdWords management's valuable. We charge a valuable price for it. It's $2,500 for the first month to get everything set up and to manage it for 1 month. $1,750 for the months 2 through 5, and then $1,200 a month for month 6 on out. But the thing is, it's an investment. It's an investment. So, and that doesn't count paying Google. You're going to pay Google. We want you seeing at minimum $2,000. We want to see you $3,000 up paying Google too. But again, it's an investment, guys. It's not an expense. It's an investment. We provide great profitable work. We put in a lot of time into those, and we spent over $300,000 of wasted ad spend. $300,000 worth of web traffic that benefited junk doctors, that had no benefit at all to junk doctors, was spent. Hell, it'd take 22 years to pay us in management fees to get that $300,000. It's just such an awesome deal. I wish JRA was around, something like JRA was around when we started Junk Doctors, because we'd have saved so much more money, and we'd have learned stuff a hell of a lot quicker. Business package is on sale, $50,000. It was at $25,000. That's been missed out on. It's now $50,000. It's on its way up to $75,000. So if you're considering getting into the junk removal business, now's the time to do it. We're getting ready to go into busy season. We can have you up and running in 2 months. That would put you getting open right here at the end of May, 1st of June, and you'd have some great months. June, July, August, September, and October are a very, very busy season. Is a very busy time for the junk removal industry. So get on it now. Quit delaying. Give us a call, 919-622-2698, 919-622-2698. www.junkremovalauthority.com, or email me, lee@junkremovalauthority.com. Hope everybody had a great, just really enjoys this episode. We'll have more coming to you before you know it. Thanks for joining.